leaving the stock market and, to be held in cash. Most of it, at least, will not be held in cash. If you look at the DAX, look at the Euro index. This is the Euro index. Look at it. So there is a lot of uncertainty, let's put it this way, and this uncertainty is definitely going to continue until at least Wednesday morning. Hopefully, if common sense prevail, the market will come back to its normal sense, and we're going to get what we call the Christmas, the Santa Claus rally, which begins pretty much after the 25th of November. And of course, barring the unforeseen that Mr. Trump gets into power. So aside from that, if you look at the currency, which we discussed last week, we pretty much, if you recall, we had this conversation that we are going to be positive on the euro. This is last week's pattern. We're going to be positive on the Aussie. We're going to be positive on the New Zealand and the Swiss. And we're pretty much going to be negative on the rest of these. You could see that the euro moved very nicely to the upside. The New Zealand pretty much moved higher, and the Swiss, all of these four pairs moved very nicely to the upside. The Canadian and the dollar, as you can see here on this chart, sold off badly. I'll take you to the radar screen from last week. Now, just so that I'm showing you this, maybe just to give you a heads up on how you should be trading it, if you will. For example, if you take the dollar MEX, we have been discussing the dollar MEX of late, and it has been, as I mentioned to you before, one of the best pairs to trade. I mean, if you take a look at this, this is from last week. We were supposed to be buying it at 18.99. This was the buying point. And right now, it closed on Friday exactly or pretty much at the same level of the starting point of last week. But what you need to be looking at, if you see that it moved, first of all, the 18.99 was a structural point, and it was the long point. So these 2 points, the long point is the same as the structural point. So this has doubled the magnitude and doubled the strength. And then it went up to the next structure level, which is the 19.08. Then it went up to the third significant point or structure point of 1944, and then it started sliding back. So just by looking at the dollar MEX as a trade, you want to be buying it when it goes above the entry point, especially if it's a double point. And then when it goes to the second structural point, or the first, I mean, but if it goes to the second, that's more significant. If it goes to the first one, that's good. So above the long point and then to the following structure point, that's good. But if it goes beyond the first structure point and it goes to the second one, you can consider this a 2 standard deviation above your entry point. I mean, you can assume that it is close to 2 standard deviation. And this is where the rubber band, the price elasticity, the rubber band is stretched. And once it loses its momentum above that second structure point, you will find that as a rubber band will snap back, you will see that the prices will come down. So as you can see from this as a classic, you will be buying it at 18.99. It will take you to 19.44, and then you would sell it. You can go short at, for example, 19.400 or a little bit less. So let me show you that on a chart, because this way, this is how money pretty much is. So for example, if you look at the dollar max chart, our buying point was this red line. Okay, I'll make it yellow. This was the buying point from last week. We are going to buy above 18.99. And then it went above the 1908. And then it pushed higher to the 19.44, you see on this yellow day. And then it came back down. So we can go short somewhere, let's say around 19.38, 19.4, whichever way you like. But your stop is going to be above the 19.44, and you can catch a nice counter trend move. This way you're capturing the move in the right direction, and you're also capturing a counter trend move. So I'll take you back to the radar so you can see some of those trades that actually developed last week. So for example, you can see that the euro pound, because I know some of you had the euro pound, it's the same principle. It went above your buying point. It went above the very long structural point, which is the 1904, spot 094, and then it pulled back, and that was the gain. The same thing with the Aussie Swiss. That was a brilliant move. I will show you the chart, and in the Aussie dollar also. And the other moves that were really good was, for example, the euro pound. That would be a buy above the 1.43, a snapback, and also the pound yen, a snapback above the 126.7. I mean, you can see that the pound yen gave you like 300 pips. The euro pound, the euro Aussie gave you another 300 pips. The New Zealand CAD also moved very nicely, another 300 pips. And the same thing with all the dollar pairs. You can see all the dollar pairs has just paid us quite well. And just a quick point, which one of those pairs has a lot of reversals? So the dollar has 1, 2, 3, 4, 5, 6, 7 reversals. Pretty much it's the one with the most reversals, and this is where we all make the best money, in the reversals, in the failures. When prices fail to stay above a structure point and what we call a structural failure, these are where most of the money is being made. So having said that, we are going to have two different strategies for this week. We cannot have a singular focused plan for the week like what we do every week. Why? Because we have a major event that is going to happen Tuesday into Wednesday. And going into that, a lot of people are going to be squaring their position. What I mean by squaring, they don't want to have an exposure, or they don't want to take an unhedged bet for any one side, because as any bet is made, I mean, it has a 50-50 chance of succeeding or failing. So any trade, whether they're high probability or not, it has a very good chance, a 50-50 chance of losing. So by this, they don't want to go into the election with a complete exposure, particularly when we had an influx, or there is the precedent of the Brexit vote, and we also had the disgust, at least my personal disgust, of the presence of Mr. Nigel Farage here in the United States supporting Trump and using his same vile and language. Anyway, so everybody now, yes, they want Clinton to win, but they have in the back of their heads the Brexit situation. So we have two choices. Either we have two plans, one plan that will take us to Wednesday morning, and then another plan that will take us from Wednesday morning going into the end of the week. Or you can decide to trade very small or not to trade at all until Wednesday. That's, again, depending on your risk tolerance. But there is no question it is going to be extremely volatile in the next couple of days. So with that said, my suggestion is to do like a two-plan thing, take a short term till Tuesday, and then take another trade or the rest of our trades for the following after Wednesday. Now, if you look at the next week calendar, just so that we can see, as you can see that there's nothing really happening on Monday. I would say the trade balance of China is important, but the expectation that it's going to have a positive balance. So if it goes up to expectation, then it's going to have a good effect, a positive effect on the Australian and New Zealand. We have the manufacturing in the UK, which I don't think is going to be important. And then, of course, this is the big one. In New Zealand, we have the rate decision, the rate statement, and the official cash rate. Now, as you can see here, they're expecting a cut. The actual rate is 2.0. That's the present rate. and the expectation of that's a 25 basis point cut, which of course will have negative impact on the New Zealand, but it's on Wednesday. This is after the election. So that, again, any plans that we're going to do to the New Zealand will have a plan going into Tuesday, and then another plan after the rate that's going to come out. And then we have the unemployment claims and the Bank of Canada. So that's pretty much the next week calendar. There isn't really much on it, anything of significance except the New Zealand rate. And last week, just to recoup, we had two big numbers that came out. The first number, or the first events, plural events, happened in the UK. First, we had a court deciding that it's probably the parliament should vote on the Brexit, and at the same time, Prime Minister May came out and said that they will appeal the judgment. So again, there is a date, I think probably was set for the Supreme Court to decide on that. So with that in mind, plus, and this is the ridiculous statement, Carney came out and said that things seems to be slightly normal, or getting, I want to show it to you, that's not it. I don't know, I'm trying to find, anyway, what he said pretty much that they may be, he upped the growth of the GDP in England for 2017, that the from 0.8 to around 2.0, and he also said that the bank will be looking at either cutting the interest rate or raising the interest rate based upon inflation. So he is going to manage his position with regards to the pound, whether raising interest rate or cutting interest rate based upon the events in the market, which is a very benign statement, and it is a classic statement that any central banker would do, is that they are data dependent. But none of those statements takes into consideration whether England is going to trigger Article 50 by March 17th as declared by the Prime Minister or not. And then what is the effect if it triggers? So the first unknown is whether they will trigger it on March 17th. Two, what is the impact of triggering Article 50? And the third unknown, whether or not the Supreme Court is going to uphold the decision of the lower court to take the issue to Parliament. So those are pretty much three big variables going that overshadow the statement of Carney. So Carney cannot say anything else. If you were in his position, you cannot say anything else. Right now, with the weakness in the pound, as you can see on the chart, that has created some positive numbers in the UK economy. Tourists is very high in the UK. A lot of retail sales is getting higher. Why? Because a lot of visitors coming from all over the world taking advantage of the lower pound, and that the British goods are not as expensive as they were prior to that. So with this decline that you see here, I mean, just to bring things into perspective, the British pound has declined 30%, 30% since, let's say July 2014. 30%. That 30% by any sense of, just by common sense, made the goods of services of the UK 30% cheaper. Therefore, so as a result, there is a lot of demand because people found value in the British goods and services. And this is good. I'm happy for the British economy. I mean, that is fantastic. I mean, hopefully it will continue. So that positive numbers to the British economy is primarily because of the weakness of the currency. And the next date that's coming on the calendar is March 17th. And this, we will know how the negotiation with the EU is going to take place, whether it's going to be hard negotiations or soft. And as you have seen, the ridiculous situation in the EU when you had the small Belgian county that stopped the Canadian trade treaty. I mean, because the 27 countries have to agree on any treaty. So assuming that somebody in France is unhappy with the treaty, or somebody in Belgium or whatever will have a problem with the British trade treaties, that treaty can stop. I mean, they have this kind of veto, ridiculous veto power, which is amazing. But they stopped the Canadian. I mean, Trudeau was ready to board his plane to fly to Brussels to sign the treaty, and they stopped it, and he canceled this trip. So in the UK, you have to take this into consideration. When you're negotiating with the EU, you have to come up with a negotiation that satisfies the 27 nations. And a major component of those nations, they want the freedom of travel for their citizens. They want them to come to work in the UK. I mean, if you look at the Eastern European countries coming to the UK, I mean, you can't go to a restaurant in England unless somebody is speaking an Eastern language. Now, if all those guys are going to be deported, that, again, they send money back to their countries and so on. So it's a very complicated situation. Yeah, Walloons in Wallonia. So thanks. So to cut a very long story short, what we see in the pound here now is, again, part of the hedge scenario of the dollar. It's not particularly the pound by itself going up in value. It is simply short covering. People are committed to the short side. They are buying some British pounds so that they can hedge their exposure, because nobody knows what is going to be the reaction in the to the United States. So by looking at the British pound, you can see this is against the Aussie. I'll show you the Euro pound. I mean, the Euro pound just poked its head above the 9041, and then it rolled over. This is the pound move. This is pretty much the pound move. So again, the long-term weakness in the pound should prevail, and this prevailingness of the weakness again would begin as of Wednesday, at least. So tonight, tomorrow, and Tuesday, we can expect some strength in the British pound, particularly in the pound dollar. At least it's going to come pretty much to the 127.91 before it comes back down. We can expect some strength in the pound CAD, because the Canadian is very weak. And as you can see, we came right above the 167.18 structure point. So in the pound CAD, we really have a very easy trade. Very easy. Why? Because right now we have a buy signal, because we're above the 1.6718. Your short trade, where you go short or you reverse, is below the 1.67. So you can buy now the pound CAD for a move upwards, and then your stop is below the 167.18 for it to flip. If it comes below the 1.6718, then you can go short. If we take the pound New Zealand, as we have discussed, this is all-time low. I mean, the pound New Zealand, as you can see, this is the weekly chart. It has never been there before. This is as weak as, it's a near all-time low. So what's going to happen, most probably, is that this weakness, either the pound New Zealand is going to move sideways as such until Wednesday. If they cut the interest rate, that should move the pound higher against the New Zealand, and you can add to the move up that is coming from the interest rate cut, you can add to it some short covering. So as of Wednesday night, if you see the news comes out, a cut, and you see that the pound is moving higher, the pound New Zealand, and it's reacting positive to the news, i.e. it is going up and the New Zealand is coming down, then it's a good trade that you can take the pound New Zealand, because you're going to have now good action after bad news, and you are going also to have a short covering effect, because the pound will be going up, will be steady, because the weakness in the US dollar and the weakness in the CAD. So the weakness in the dollar and the CAD is going to be putting a floor under the weakness of the pound, or will push it a little bit higher, and then we pair that with weakness of the New Zealand, then we should be getting a push pretty much to the 177. So you have maybe 400 or 500 pips on that trade. So with regards to, I mean, I would say the pound New Zealand and the pound dollar and the pound CAD. The pound dollar Aussie is pretty much like the pound CAD. We're above the structure point, so we have an easy trade. We can go short below the 1.617, and above it we are going to take it long. Maybe it should come up to the 1.66, another 200-300 pips. So we can look at, as again, I'll just add them up: pound Aussie, pound New Zealand, pound CAD going into this week. These are pretty much the high candidate trades. The euro also, moving on to the euro, let's see the pound yen. It's not particularly clear. I mean, I don't see the pound yen. Okay, I apologize because I was about to give you an opinion, and it's a very big mistake to trade on opinions. And as you know, our motto is trade what we see, not what we think. So what we see right now is that we are above the 128.70. We are above a structure point. So we are going also to buy the pound yen as long as it's above the 128.70. If it comes below the 128.70, then we'll take it on the short side. Last but not least is the pound Swiss. What I want you to look at this. What do you see here? We probably had a small push to the upside on Thursday, but on Friday, you see the pound Swiss is actually weakening on Friday, and you can see that the pound dollar actually strengthened on Friday. You can see that the pound CAD also strengthened much on Friday, and the reason behind that is the euro and the Swiss really moved higher for the last week. As you can see, this thing just moved from 109 to 112, close to 112. You can see that there is a lot of inflow into the euro and into the Swiss. This is the Swiss franc, and we're right at the structure point of the 103.26. We actually closed at 103.30, so that is particularly a buy in the Swiss and the euro. So looking at now, let me just give you the last couple of ones. If we look at the yen is, as we have agreed, in an uptrend, and I would be more inclined to go short the yen pairs, go short, but we are above we have a structure point here of 97.14. We're pretty much closed at it. So from what I see here on this chart is that we failed to close above the 97.14 because the high of the day was 97.38. So that is kind of a failure to stay above the structure point. And as I showed you in the Mexican dollar MEX and in the other pairs, when it fails to stay above a structure point, then we want to take it on the short. So as of now, we can be looking at buying the pound yen, buying the euro yen, buying the Swiss yen, we can stay away from the CAD yen. We can buy the New Zealand yen until Wednesday. Before the news on Wednesday, I'd rather you be flat all the New Zealand trades. You exit the New Zealand trades before the Wednesday. If you look at last week, look at the New Zealand dollar, it moved very nicely. That was a nice gainful trade. You can see the New Zealand CAD is actually, look at this, it's a magnificent trade from last week. I mean, the New Zealand CAD, if you look at your chart, we were supposed to be buying it at 96. It's now at 98, so that actually is an excellent trade. And you can see that the New Zealand yen kept on dancing at the 75.09, which is one of the very major structure points, and it's just doing 30 pips above the structure. So this means we have a good trade to go short below 75.09. So from here till Wednesday, we are looking to buy the New Zealand pairs. And then before the cut comes out, we're looking to sell. So which one should we be focusing on selling? We need to be, as far as New Zealand pairs, we can look at the New Zealand dollar. If they cut, this is going to weaken, so we can take the New Zealand dollar short. It should go up to 73.90 and then we can take it short. We can take the New Zealand CAD short. And the reason I'm saying the New Zealand CAD, again, is the price elasticity. This thing has moved too far. It should correct a little bit. So we're going to let it move higher until Wednesday, and then after the news, we can take it short. At least there will be profit taking in the New Zealand CAD. You want to look at the pairs that the New Zealand is making a lot of money. And in those pairs, people are going to protect their profits, so they're going to sell it. And therefore, it's going to come down until it settles. So the New Zealand CAD is one. If you look at the Aussie New Zealand, this one has just, the Aussie has weakened very much against the New Zealand, and it closed at the low of the day. So that means it has a very high probability of snapping back up. So we can buy it, I would say, let's take it above the previous buy day low. So we can buy it above the 104, the 2-day low. We can buy it above the 104.87. So we can take the Aussie New Zealand, we can take the New Zealand CAD, and if we look at this is the New Zealand Swiss. It didn't actually move. It actually came down on Friday because of the movement in the Swiss. But we can trade the CAD Swiss. I mean, think about it. If the Swiss is so strong against as a whole, and the Canadian is weak, so you can look at the CAD Swiss and look at this. This is brilliant. The short for last week was the 74. So we have now a very good trade. And if it takes the low of Friday, of course, I'm going to send you the numbers. You can take it to the short side, but that is, so you can do the pound Swiss, the New Zealand, the CAD Swiss also as a continuation. The Euro CAD also, you can look at the Euro CAD. Closing near the high of the day, and we have a minor structural point here, which is the 149.22. We closed above it, so this thing should be going to continue higher. The Euro New Zealand is also very interesting. The structural point is the 1.511, and we closed at 1.581. So that means we want to buy the Euro New Zealand because they're going to cut the interest in the New Zealand, so the New Zealand is going to come down. So this is actually a very good candidate because your risk is defined by about 70 pips, and your upward reward at a minimum should take you to the 149, 140, 154. If not, it can take you to the 164. So you have, I would say, 8-1 in the first trade, risk-reward ratio, and between the second trade, you would have maybe 14-1. So this is a primary candidate for you to take the Euro New Zealand, and you can do the same thing with the Pound New Zealand. Again, just going above that daily high, above the 1.78, then you will buy it. Your stop is going to be the 169.76, which is the low of the day, and the reward should take you to 177. So you're risking 1 to make 7, so 7-1. Okay, so this is pretty much the summary of how we are going to plan our trades. For the dollar, I would stay away from the dollar this next few days. As you can see, the decline that has been in, we had been negative on it from last week. I showed you the stock markets. I mean, let me show you another chart that this is the weekly chart from last week, all of them. The only currency that is negative for the week is the dollar. And this weakness should continue for the next 3 days. Then we might get a reversal. So my suggestion for you guys is, even though I'm going to send you numbers for the dollar trade, I suggest that we hold back on the dollar trades until Wednesday. Once the dust settles, then we can decide what are we going to do. We're going to be buying the euro, we're going to be buying the Swiss, and we can buy the Aussie. The New Zealand, we're only going to buy it till Wednesday. The dollar and the CAD are bad, are weak. The pound you can play for the short covering. So we're going to do this as neutral with a positive bias because we're expecting a short covering rally. These are negative, the dollar and the CAD, and the yen, because of the weakness, we're going to change our bias from neutral with a positive bias to negative with a positive bias. So this is a special case, and these are the other ones that we can, trade by itself. Okay? That's the summary of the plan. I'm going, within the hour, I'm going to send you the charts so you can have dinner until I send you the charts, and then you can start working. Okay? Anybody has any questions or anything? Anybody has a position he wants to discuss, or you're all okay? You're good. Okay. All right. Then I will send you the stuff within the hour, and I will see you hopefully next Sunday. Happy trading, everybody, and good luck, and be careful out there. Be careful. No heroics. Okay? Take care, guys.